Most people think a $500,000 house is normal, just a typical home in today's market. But what if I told you very few people can actually afford it? Because affordability is not about the price. It's about the math behind it. And that math, it's a lot harsher than people expect. Let's break it down simply. A $500,000 house usually means a mortgage, interest, taxes, and insurance, not just one number. And when you combine all of that, you're not paying $500,000. You're paying much more. Let's say you put 20% down. That's $100,000 up front. Before you even move in, that leaves a $400,000 loan. And this is where things get serious. At current interest rates, your monthly payment could easily be around $2,500 to $3,000. And that's before maintenance, repairs, and unexpected costs. So realistically, you're looking at closer to $3,200 a month. Now here's the real question. What income do you need to afford that? Financial experts say your housing should not exceed 30% of your income. So to afford $3,200 a month, you need to earn over $10,000 a month. That's $120,000 per year. After taxes, things get even tighter. And this is where most people get stuck, because their income doesn't match the lifestyle. So what do? They stretch. They push their limits. They take on more risk just to afford the payment. And that's where the real problem begins. Because now, one unexpected expense can break everything. A job loss, a repair, a rate change, and suddenly that affordable house becomes a burden. Because affordability is not about surviving payments. It's about sustaining them. And this is where the real difference shows. People who truly understand money don't just ask whether they can afford something today. They ask whether they can afford it consistently over time, without stress, without pressure, and without sacrificing their future. Because a house is not just a purchase. It's a long-term commitment that affects your flexibility, your decisions, and your lifestyle for years. When too much of your income goes into one payment, everything else becomes harder. Saving becomes slower. Investing becomes delayed. Opportunities become limited. And over time, that trade-off adds up. This is why the math matters more than the emotion. Because emotionally, a $500,000 house might feel achievable. But mathematically, it demands stability, discipline, and a strong financial foundation that most people underestimate. So the real question is not, can you buy a $500,000 house? It's, can you comfortably sustain it without losing control of everything else? Because true affordability is not about qualifying for a loan. It's about maintaining your life.